CNBC parent company Versant will start trading as an independent company on the NASDAQ today. And joining us now, Versant CEO Mark Lazarus. We're going through with this.
We are going through with this.
It's going to happen.
Here we go. It's been a year in the making.
9:30.
Welcome. Thanks for being here, and Happy New Year, everything else. I quoted you earlier. I'm going to quote you again. This is a big, profitable portfolio, which has been historically managed with different priorities. Investing to build the brands of Versant was simply not a priority. That won't be the case anymore. Is that I put that in a nutshell as the corporate mission of what
that is exactly right. And as part of Comcast and NBCU, we had other priorities as a company, and I was part of the decision making. We made different decisions because we had a different company and a different strategy. And now, bringing these into their own company, we're going to be able to invest into them. We'll invest organically, and we're doing that. And I think you guys are seeing some of what we're doing. And the strategy of these verticals, and I saw that you had Rich on earlier, and I think he's listening to what we're saying. Hopefully, the market is listening to what we're saying. That vertical scale is going to be a way for us to differentiate and to diversify our business, to be not so beholden to pay TV. While that's still a big, profitable part for us, it's not going to be the end game.
So as part of a large company, there were times where there were parts of NBC that could have used investment, and for lack of a better term, we provided some cash flow for other ventures that we could have used for ourselves that we didn't. Did that? You can say that actually did happen?
Well, it was part of a strategic imperative to do other things. Right. Peacock, very important for NBCU.
For NBC.
Investing in the theme parks, very important for NBCU. But, listen, these are big, profitable businesses. You guys generate a very nice, profitable business. It's an important, the audience that we speak to and that hopefully we're speaking to now is amazing.
If we have investment.
How we're going to act is you're going to be able to look at where are the best ideas in this portfolio, not in a much larger portfolio. But, as importantly, everything we do is going to matter, and every little piece is, there's going to be a much more of a magnifying glass on what we do.
Speak to this. There is sort of like a conventional wisdom on the street that I think Rich Greenfield sort of articulated it, that ultimately we're going to be either merged into some other business or we're going to try to buy a similar linear business. You've tried to dispel people of that. What are the kinds of things that you would want to buy, acquire, or do?
Well, let's start with the organic investments. We're going to expand what we're doing digitally in places where we maybe have just tiptoed in, and that's really CNBC. There's a much broader play with the retail investor that we can utilize the brand, the reputation of our brand, the credibility of CNBC and the talent that is here on how we're going to achieve how we can help retail investors understand their portfolio with charts and graphs, using maybe AI stock recommendations. There's going to be a lot of opportunity in the organic investment. For MS now, there's never been a digital footprint, really, other than a text-based digital footprint, no video strategy. That was a decision that NBC News Group made. We're going to make a different decision and invest in a D2C product for MS now for a very large audience that has a real passion around what MS says to them. And that'll go down the line. We've made 2 small acquisitions. We're in the process of finalizing those already. Free TV networks to diversify our ad base away from pay TV into free over-the-air television. And a company called Indie Cinema, which is a software business that will help power what we do globally with Fandango in the movie ticketing business. So investing in the verticals as opposed to just horizontally investing in more linear scale. The thing, and you guys are a big part of this, our portfolio is 62% live news and sports. Rich, earlier you guys talked about the bundle and different types of bundles and cord shaving. Live news and sports is a big part of that. And we have a really strong position with CNBC, MS Now, USA Network with its large sports portfolio, and Golf Channel to play in that live news and sports area. And that's an important part. To go horizontally and dilute that significantly may be a more difficult road for us. So we think vertical is the way to go.
So was Rich Greenfield wrong when he suggested that you might be interested in some piece of Warner Brothers Discovery if they were to spin off any of those pieces?
If there were pieces of any portfolio that we could say fit into our desire to build around a linear service and grow them vertically and invest in a genre, he mentioned food. That's an interesting one. But because it's a business that's much broader and it's a marketplace that's just broader than a media play. Right. And that might be interesting, but that's not our priority right now. Our priority is the 4 vertical markets that we are already in and that we have found some success. And specifically, I use golf as our model home because Golf Channel is a big, important brand, and we used that to then launch other businesses, like Golf Now, our tee time business, like Golf Pass, our video subscription business, where we're partners with Rory McIlroy, and an underlying software business that connects us with more golf courses than we even create tee times for.
Is it fair to look at, I'm trying to decide on a comp. We do comps all the time for real estate, wherever we are. If we look at what Netflix is saying that their Warner Brothers is saying that stub is worth, and you look at debt, and you look at cash flow, and you look at multiples, and then you look at where Versant is. Is it fair to compare those two and say that if they're worth $4 or $5 a share, Versant is undervalued given the relative?
Well, I hope so. I mean, the marketplace is going to dictate. We really like our portfolio compared to some of the other portfolios out there. We like our balance sheet. We're being launched with a fortified balance sheet that's going to really allow us to be aggressive and to be on our front foot as opposed to on our back foot and being worried about paying down debt with $1. So we are we like our position, and we think that we have a real opportunity. And listen, if we think we compare favorably to sort of the standalones that are out there, to the pure plays, and we think that our growth strategy will be a winner.
I mean, you could, as a money manager, you could arbitrage it based on its metrics where it is. If the other stub was trading, Versant will be trading today. When that comes out, you could buy Versant, sell Warner Brothers.
We'll have to see what happens. It's an exciting day.
Good suggestion.
Probably a good way to end it. We'll have to see what happens. Godspeed.
Thank you. Glad to be in this with you.
See you at the bell.
Being here today.
Yeah, see you there. Thank you all.